Good morning, everybody, and thank you very much for attending this webinar from PayProp, looking at the client money. We can shape the future of property payments within the UK. Before we actually go in, I'm going to share a presentation. What I just wanted to do is outline the reason for this webinar, and actually there is a little bit of participation after this webinar that we would put a call out to the industry. Later this month, on the 30th of March, the government is having its first face-to-face event since the pandemic, where they'll be looking at addressing various options. And one of them was a recent call that the government did to review the AML CMT money process within the UK, with a particular view of the whole of the private sector, but obviously how that will actually affect the private property sector as well. As we've moved away from the EU, and everybody's fed up of hearing Brexit, but it's actually meant that the government needs to relook at some of those policies. And there's buzzwords that we're also going to cover around what will cryptocurrency, what will blockchain mean, and how will we deal with this sector and the supervision. And the core of this meeting that's at the end of this month is actually to look at how technology can help the government in these processes. We've also seen with the change and with DLUHC and their white paper and the announcements for later on in the year, that there are planned changes to our sector. And while there may be lots of people like Generation Rent and Shelter who give a voice to the tenants, what we actually want to do with a particular view to money is make sure that there is also a voice to the industry. So as I mentioned, there will be a call to contribute at the end of this, and I want as many people to contribute as possible. I will mention it throughout. If it's somebody you know who hasn't attended, but as you know, who has an interest in this as the sector, we want this to go as wide as possible. When we sit there in front of these policymakers who are going to decide on key things that will impact our future as the private rented sector, we want to make sure that our voice is heard. So what I'm actually going to do is I'm going to load up the presentation that we are going to do to the local government as one of the seminar speakers, PayProp, which is actually looking at client money, the past, the present, and the potential. And there's a few subjects that we've been asked to cover as one of the two seminar speakers at the end of the month. I'm not going to go in detail as to how we do it to the government. What I'm actually going to do is I'm going to change this content as to why I think it's relevant for it actually for the voice to be heard by our actual members, our estate agents, our letting agents out there, our people operating in the private sector, and what this conversation could mean to you either later on this year, next year, or for our future. So if I just share that on the screen, and as I say, this is the presentation that we're going to be doing at the IGPP. So it's this client money in the private rented sector, past, present, and potential. And the running order when we're looking at that is actually a number of things that they're asking us to cover. So we're looking at the anti-money laundering regulation so far, and I'll come and show you what that journey means and what the future of that journey could mean for us operating within that sector. Client money protection has now been introduced, but it wasn't a smooth journey. What we've actually learned through that is how there can be unintended consequences of legislation, and actually legislation actually colliding with each other when it goes across party. We've had lots of things announced regarding legislation, regulation, and rental reform. There's also things that were announced pre the pandemic that seem to have gone on the back burner. What are they actually asking us to look at there and that conversation? I mentioned some of those buzzwords, but when people are looking at the future of property payments, I mentioned how land registry or HMRC, what's their view and how are they viewing the future of things such as cryptocurrency and blockchain, tokenization of assets, and why is technology particularly being asked to enter into those conversations now? There's always been a little bit of a coexistence between technology and data and the protection from financial crime. But certainly with this latest call to action, there has been more of a voice that they're looking at technology to help to provide that solution. So I want to cover those, but let's go into the first one and let's look at anti-money laundering and why this is becoming such a hot topic. So if we go back to the original directives and everything that came in, and the main acts that cover us, such as the Proceeds of Crime Act, there was an idea that we would start tackling financial crime. But in recent years, with the fourth directive, the fifth directive, and even though we didn't take it, the sixth directive, because on review, we were actually, a lot of the changes that EU were looking to implement, we already had within our legislation. What we've actually seen is an escalation. And part of that escalation as well is the government looking at the private sector to both manage the risk and also the policing of the financial crime aspect. Now, whether that's been done correctly, whether we agree with the sector supervision, it is certainly the government's intention to bolster this in their upcoming review that they've done for the anti-money laundering. And we'll cover that in one of the later slides, what that means now we're not in line with the EU. What does that mean from a convergence and divergence point when we look at what policies are being put in the EU, but also in the US, in regards to how that could affect our property sector, in what could be expected from us from a customer due diligence point. But I think from anti-money laundering, it's here to stay. Now, I'm going to have a little bit of some polls in here, just because I want to start getting the feel for the people that we've actually got and what your experiences are. We'll separately be doing this at the end from the survey, but I want to put up our first poll. And post the fifth anti-money laundering, there was a requirement for us for sales, it's been there since the fourth, to have the money laundering reporting officer, but it actually brought in this new regulation where we had to be registered for any single payment where we were paying the tenancy more than 10,000 euros. Obviously, there was the equivalent transfer rate, but there was a requirement for us to actually report those to the HMRC as the sector supervisor with this recent change. And I just want to ask how many people have actually registered for that? Have they been caught due to their book, to their portfolio processing for sales and for lettings? Or is it something that's actually not fallen in? Because one of the things when we look at customer due diligence and where we see this going is actually the financial crime element, and a risk-based approach doesn't necessarily reflect what we've been asked to implement to date. So for example, if I have a 9,000 or a 9,000 euro rent and I have 20 properties through one agent, then there's no requirement for me to actually report that. But if I have one property at 10,000 euros, then that needs reporting and the enhanced due diligence that needs to be done on that. So when you look at it from a risk-based approach from financial crime, I think the reason for this review, and if you look at the government document, it certainly starts coming through in their call for information, is what they want us to do is to more manage that risk and to certainly make sure the private sector as a whole doesn't become a processor or a haven for the proceeds of crime. And they're starting to look at how that actually impacts. So we've got this poll up now. What I'm going to do is give people time to fill that poll in. Okay. Not actually seeing that actually coming up with, do we close it? I'm relying on my marketing to do the wondrous things now. If we've had everybody have their answers, if we close the poll, I think I get to see kind of where people have actually been able to put theirs in. And so, as we say, most people are actually getting caught up in for the sales and lettings. So it's already starting to impact our processes on both our property sales and also on our lettings. And the call from the government is that this will actually be extended. We're not sure how, and let's be honest, this is just at this stage is a call for information and review that they're asking for technology to help with. But if we're going to look at this, if we're going to look at a process and we want to see the sector supervision, this is why they're asking technology to get involved, because we can take that human element, we can take that processing. If we know a fixed and finite point of where something needs to happen, that is where technology can not only help in making sure it happens every time and without fail, but we can help on the recording, the delivery, and the removing of that being a burden or seen as a tick box exercise, something that has been put in to add more bureaucracy to the process that we've got. And when we come on, that is really the key of what they're trying to look at here. They want to make sure they tick all the boxes of what needs to be done. But from HLMR and HMRC, their main action is to speed up the property process. So when we look at speeding up the property process and how they do legislation and laws, we've got to kind of look at recent legislation. And I suppose one of the most recent that we can actually look at and bring in would be our client money protection in the UK. Now, it also feels that sometimes things are happening within the industry, that as the industry, our voice is heard. A lot of people asked for client money protection in the UK. It was a shout out from most of the bodies, be that RICS, Property Mark, and most people who were actually spoken to. When you actually look at the change that's happened since the client money protection came in, however, has it had the impact in the industry that we were looking for? Has it been sector supervision? Do we feel that there's enough punitive measures for those that don't follow it? And that's certainly something that we covered on a roundtable event where I had the National Trading Standards team, and James Munro was covering that there is this legislation, there is this view, but it's building momentum. But when we look at actually the policy that came out, it was delayed. It was also delayed in the transition period that we were given, because there were problems that people came across. We actually found people who were struggling to either get protection from one of the 6 providers, other than some of the geographies that actually we operate in within PayProp, where we find when the client money protection or a kind of certificate to protect those funds held by the private property sector are underpinned by the government. Actually, we brought in a legislation where there were approved providers. And although there were 6, actually 2 of those fall under the same legal entities. That meant there were actually 4 provisions for client money protection in the UK. And what we actually found were people that could quite legally operate were actually being viewed on a insurance risk basis and could be turned down by a provider, even though everything they were doing were able to legally operate. It also exposed some practices that we were not necessarily aware of from the banking sector, where people had client money accounts in name, but actually as the legal instrument behind that, the money wasn't sat in a client money protected environment. What they'd actually got was a current account that had been designated as client money. And there may be all kinds of conversations that were had at the Home Office and within the banking sector itself as to whether, if it's been nominated as a client money account, that would have to be upheld. But it meant for the actual client money protection that was brought in, it was no longer viable. And at the same time that we went through this consultation and actually dealt with this release, there wasn't a view to that anti-money laundering legislation and what that would actually mean. Now, I'm sure some people may have heard or may even been part of, and I'm gonna put up our second poll now, which is actually going to ask you about your to date. Have you or do you know of an agent who has been asked to close their pooled client account? So if we can just take a quick poll just to ask that, and I'll wait to see how that goes. And as expected, we're waiting for this to go up, but we're well over 80% at the moment that have actually experienced that they have actually had somebody or somebody they know that has been operating, and in most instances have been operating legally, have been registered with an independent trade body, have been deciding to adhere to a code of practice with a redress, everything that's been asked for them by the government, but suddenly find that an undesignated, so we call it a pooled client account, and I put that on the poll, but for the purposes of legislation, it's an undesignated client account, which basically from anti-money laundering purposes mean that the end beneficial party is not named within the actual client account itself. So that's where this pooled process comes. And part of that legislation that we were talking about as anti-money laundering has gone through its growth, suddenly had an issue for anybody who operated within an unregulated market. And as we know, our property sector, although there may have been recommendations from Lord Best under Roper that we go to a regulated property sector, we still haven't made that transition. And so for the banking community, there was a view that actually they needed the comfort of being able to work with regulated entities, and only regulated entities actually accessing pooled client accounts. But if that's the case, and this came in years ago, why are we starting to see an escalation and more people actually encountering this and finding that banks are actually writing to them and suddenly saying that they need a client account designated for each of their property owners? And the reason is, if we look back to the bank, they would have been given some comfort when Roper came out. Do we want to change this whole sector when it looks like the government is actually moving it down the regulated route? There is also the view that actually, while this has actually come in for client money protection, it actually allows them to review on a client by client basis. So if a client is able to show that they can operate and they have the right risk-based approach to client money to meet the anti-money laundering regulation that they would expect were they working with a regulated entity, then the bank can show an evidentiary route and continue to provide that client money. Unfortunately, what that means is that for the majority of the UK, we are a small to medium private property sector industry. And for us to have the bureaucracy, the paperwork, the admin process that needs to be in place to be able to show we operate as if we were a regulated sector, it's a burden that most companies cannot take on board. So when we look at the client money protection, and the reason that the government want us to now review this is they're looking at technology as a solution, because it is something that we can operate. For anybody that is currently using our software system, that is how we meet the requirement. For you, we allow you to operate an undesignated client account. Why? Is because we are able to evidence to the banking community that by using PayProp, we take that evidentiary burden and we provide the information that would be needed should you be operating as a regulated entity. And there are other providers out there that can help you do the same, or you can have the same admin paperwork. But as we know, that admin paperwork will only grow. So what the government is putting a call out to technology to come to this actual presentation at the end of the month is to try to find a technological solution that means it doesn't add more burden to our industry, which is actually great to hear, because it's not always the way that we have felt perhaps legislation or actual changes to our industry have actually been implemented with a view to looking at the work that is being given to property agents. And I think the difference when we look at that of why technology is because they are starting to now see this gel. And we're going to come on and mention some of those buzzwords, but the buzzwords that people are mentioning and being talked about is actually causing government to change its tack, to change the way it approaches this and how it actually decides that we're going to implement legislation. It is not going to change overnight. As with most instances, if we are looking at changing legislation, anti-money laundering, the call out for the information, this is a journey that's on. So as people within the property sector, we sometimes, I think, expect things to happen more quickly because it's the nature of the industry we work in. While this is welcome to see that the government is starting and encouraging technology to get involved in this, it is not going to be a step change where I'm suddenly saying, post this being done at the end of the month, we'll start seeing these changes actually being implemented. But what it should help to change is our market perception. But actually what we want to do is start to feel that we are being involved in these discussions, that changes to client money protection, to AML, or to other things that may impact the property sector, that they're being done with us rather than to us. And I think that is the journey that we're starting on now with the government. But we need to make sure as agents we have a voice. And we have a voice. We are really good at telling each other what we need within this industry. I go to various conferences and seminars and meetings and steering groups and collaboration of best practice. And we have some of the most vocal people in our industry that have great ideas. I don't think they always filter down to the policymakers and to the people that are involved. So from a client money and from a technology, from PayProp's point of view, what we do want to make sure is that that voice is heard, and not the voice of a technology provider, because we can actually meet what needs to be done to provide the best synergy between the two parties. But what we actually need to make sure is that this isn't always just a government view to handle financial risk. If they are expecting you as property agents to actually deal with this, and the client money protection, we need to make sure it's fit for purpose. Unfortunately, we had a collapse that happened in the UK during 2021 of a provider. And what we're actually finding out from that is, due to other documentation that needed to be in place, as we found with other insurances, we're now finding that the client money is not becoming a insurance of last resort, that they are also finding reasons as to whether that should pay out or not. And I think for client money protection to really work, we need to find a way for technology to mean that it works for everybody. And we also need a process and legislation that means that as a consumer, it is something I can rely on. And so for that, we need to get into that conversation. But when we start getting in, that brings into the wider question of what do they see as our future for the legislation, regulation, and rental reform. As somebody who's been involved with government for years now, one of the things, it doesn't matter how they change the name, we need some stability. The amount of changes that we've had with housing ministers, with policymakers, we know how long it takes for a bill to go through. We need somebody who can see it from start to finish and see the whole picture. And at the moment, it's kind of, we see that something changes as with the political wind. And for us, this is not a political beast. This is our industry. This is something that we do. And as shown during the pandemic, with us being one of the first industries to open, we are vital to the economy. So we need a uniformed approach to how people look at this. And some of them, when we see, they have some ideas, but we need to make sure that we're able to influence those. So even DLUC putting out their white paper of what they want to hit, there's a number of things that actually had people as questions over this regarding the polls. What are we actually going to be seeing? What are we actually going to be looking at? And they're really the issues. So if we look at where they actually sit on the rental reform, they've actually, DLUC announced that the rental reform white paper will be coming out during 2022. I'm just going to put up a poll, because this is probably one of the biggest things that will affect our industry during 2022. All the proposals in there have the potential to affect our industry. And I just want to put up a poll and ask you, this was actually put up by DLUC, and they announced their intention of when they are looking to release the first white paper. All I want you to do is, are you aware of when this white paper is going to release? And through the poll, if you could submit your vote, just so I can find out how are we keeping abreast of this information? When is the intention for people to release this? So we'll give a little while for that to go up. But the second word on there, obviously, is looking at ROPA. And I think to anybody that you speak to within our industry, and actually when I was putting this information forward for it to be in at the government event at the end of the month and speaking to the lobbying company, it was a hard request to get ROPA even mentioned within it. It has certainly seemed within our government to have taken a little bit more of a back step. I don't think it has been forgotten, but I think there are other things that they are actually looking at or looking that could actually impact our industry. One of those that obviously is the real contention is what they're looking to do with Section 21. And I think everybody across the industry now, this is a when, not if. Kind of the same reasoning that we got to with the Tenant Fees Act. There was still a lot of people, I can tell you from everything that we're getting from government, this is definitely a when, not if. Just like the Tenant Fees Act, it has immediate cross-party support, and they want to look at how they do it. But again, it feels a little bit like me, it's something that's coming as a change that's already happened. We've already seen this happen within our devolved administration when Scotland moved away from ARTs to PRCs, and it actually put in a few protections in there. So although we removed that, there were some exceptions put. There was the change to the housing tribunals. So there was a number of things that we can learn from. But actually, the shouts that come from your generation rents and shelters on the amount of retaliatory evictions that are using Section 21 is just not real for our industry. We don't want to do a retaliatory eviction and a Section 21 if we don't have to. That is not a property agent's route. But I think that from a view of the announcements and what we've got coming out from government, that is certainly not how they're seeing it. So actually, if I look at this on the poll, most people have actually put that they believe that the release is actually autumn 2022. I can tell you that the release that came out is the initial announcement was for spring 2022, which I think is ambitious, knowing at the speed of some of these, but it shows the impetus that is now being put from Gove and his department in these things that make a change. I certainly think that there's more collaboration required. Some of the things, and it's talked about within our industry, such as the change on deposits and actually being able to change the lifetime deposits that move you. I think some of how that would work, who picks it up, how that move happens is causing lots of people headaches. But I think the intention to show of a spring 2022 certainly shows the intention from the government that they want to start keeping this momentum, and changes are on horizon that will impact that private rented sector. So we often talk about this, that it feels that nothing seems to be co-joined, and that's why I wanted ROPA to be kept there, because we've got so many pieces of legislation and we end up with unintended consequences. When we brought in some of these regulations, the way that they're written had things that either a lawyer or a judge had a certain interpretation. It was never the view that if you hadn't served a gas certificate at the start of the tenancy, that there wouldn't be a mechanism to rectify. But unfortunately, we had people going to court who were encountering that as an issue because of the way that the legislation has been written. And one of the big benefits of ROPA, and the reason as an industry I think we should keep pushing, is to actually bring some consensus around this legislation. If all of the things that come through on the DLUC white paper, or what we're expecting to see on the rental reform white paper, they will actually just be more legislative changes. And how will that impact things that are already there? So we want somebody to have a uniformed view, and technology is certainly the way that will help them bring all of this information together and allow us to have a consolidation. We cannot bring this back to a non-technological solution. It is not where our whole industry, as not just us, remember that what they're bringing in here and some of the things that they make as changes, the wide-ranging impact that it means for so many different departments, for so many different teams at a local authority level for enforcement, all of these play a part. Without technology to bring a uniform view, what we're going to have is individual localized interpretations and actions that again mean that as an industry, we experience differences depending on budgets available, the amount of money that they're able to put, the enforcement team that is available in that region, as we've seen with other things such as selective licensing. And the disparity that we encounter from government to government doesn't actually help us as an industry raise our profile or help us with that trust view with the ultimate end consumer. So if we look at that, and that's the regulation and reform, and I talked about this trust through transparency, part of that needs to come from us as an industry, and we need to start making sure that we are raising it. And we can't be hiding behind or scared of shouting our positive or our negative experiences. We need to find that voice, because unlike the rest of the sector, the consumers have got a voice. They don't mind shouting out. And unfortunately, as we've seen with journalism, with stories out, it's not the guy who had the great experience, who was moved in, who found it seamless, who found the use of technology, actually was able to do everything at night. He did virtual viewings. He signed his documentation without needing to go in. He did a virtual ID check and everything, and it happened seamlessly. Unfortunately, that's not going to make the news. What they actually want to hear about is the nightmare. The person who couldn't get hold of anybody, the person who paid money and didn't get the service that he expected, because it's that sensationalism that what they're looking for. We need to make sure enough of our positive is given, that we give a mechanism for our end consumers and for our owners to be able to shout what we do good. So I'm a great advocate of using these review platforms, but not in a selective way. Let's make sure we're getting a true view of that of the industry and using it as a mechanism to show, actually, we are looking after the industry. So please include us in these conversations. And the kind of conversations around payments that are taking place is asking people around those buzzwords with cryptocurrency and blockchain and the things that you might have an understanding. I'm going to do my last poll of this now. And I'm actually going to ask you just to your understanding of, do you understand cryptocurrency and blockchain technologies? I can tell you, I'm going to click at the top. I'm probably a payment technology nerd, but it's part of where we are within our industry that we need to really make sure that we know what's happening with this. We've actually had a property transaction fully take place in the UK using Bitcoin. We've got industries that are starting to build up around tokenization. I know it had a name change, but Definder is hoping to launch the middle of this year, looking at tokenization of property. And I can tell you from a government point of view, HMRC has changed where it actually sits. So let's cover first of all, and let's look at what is cryptocurrency and blockchain, because the majority of people not really heard of Bitcoin, and that's probably what we're finding a lot within our industry. And I'll come on to this as to one of the things. Let's be honest, cryptocurrency and blockchain, it is not going to come in and from the 1st of April, suddenly this is going to be our new norm. This is something that is going to affect us, but it will be a slow change. We're currently, so cryptocurrency is simply, it is a decentralized currency. So it's like spending cash in your wallet, but it's no longer governed by a bank. And the reason for the name is it uses cryptography as a form of security to lock it. The difference being that unfortunately I can't go and withdraw my cryptocurrency from an ATM. Although we did have some ATM terminals in the UK that have unfortunately due to regulation have been found to be operating incorrectly and are having to be removed. Blockchain is a form of database. It's a form of flow for that money. So what we're actually dealing with there is we're looking at what does this mean for us and for our future. So just like cash in your pocket, this digital currency can be used for goods and services. And we'll start to see that grow. We'll start to see people able to use it at a local supermarket. We will start to see people expecting it for transactions for our deliveries, so Deliveroos and Just Eats, and that digital universe will actually start to grow. But at the moment, I would say that it isn't regulated, so that's a level of nervousness for the government when they're looking at policies, because I don't have a central bank, so it doesn't use traditional bank wealth transfer systems. So how do I actually get comfortable with this? And I don't think we'll start to see a big take up until we find a way of actually stopping the volatility that we see currently within cryptocurrency. And blockchain, essentially the database, it guarantees the security or the fidelity of that record. So the main purpose of using blockchain is to generate trust, because we need to generate trust because we don't have that trusted third party. We don't have that financial institution to sit behind that tells me this is a bank. Now, actually, our world is changed with technology. We have new banks, and often the change there is to get that trust. We have people who are your e-money services. We have Starling Bank that's come up, that's starting to get its growth. But there's a view that I'll use those for convenience. But as a human being, I don't have that same inherent trust that actually this is going into a bank. Yeah, this is sitting there and I can go away with peace of mind that that's being looked after. And blockchain is a way of actually looking at that. And over the last kind of 12 to 18 months, we've started to see the government policy and their review of this to change. So HMRC has decided now that it is cryptocurrency neutral. It's kind of taken the view that so long as blockchain and crypto is used, and for the property sector, we won't block it, but as long as the right amount of taxes are paid. So they're taking the view that so long as we still get our due, then actually we don't have a problem. I think wider, and part of this discussion and what we're going to bring up is they are the sector supervisor currently for anti-money laundering and for those taxes. So if this is bought in, and it's fine if the taxes are paid, but what are they actually going to do for where it's not? How are they going to manage it? If it's a tokenized asset where they don't know the end ultimate beneficiary, how will they make sure that that is policed? So they have a different journey where HLMR have kind of taken the view that actually we want this. So they're obviously responsible for all property and land ownership, and they've openly discussed the benefits of using blockchain and cryptocurrencies and blockchain developments. And the actual digital street was a project that they created to oversee all blockchain developments that could actually be looking at speeding up HLMR transactions. It actually hasn't had the impact that perhaps they wanted, because the interaction that they needed with other departments and other concerned parties in that chain weren't as accepting as HLMR have been. That is starting to change. The type of innovation that we're starting to see to streamline that buying process, to streamline that AML, things such as digital IDs and things like that, they are now starting to be widely discussed. And they're starting to be discussed with less trepidation as to how they would be managed and how we would actually look at this information. But as I mentioned before, I don't think blockchain will immediately change. Blockchain technology has made massive waves in various sectors and industries. So again, as we talked earlier, it's a when rather than an if for the property market. But I think with any market disrupting innovation, it takes time. I take our journey in point to change the way people handle it with client money. And market players in this with blockchain are going to need to change their processes for it actually to be able to affect our industry. So I think there'll need to be further regulation put in place, which, you know, I get a drop of the shoulders at the thought of more regulation coming in around us being able to see a change. But I think that could be brought in. Property transactions are largely still done in an old way. So there's a lot of face-to-face, a lot of handshaking, a lot of smiling, a lot of that transaction still happens in that environment. And we always talk about how it's the person in the transaction. So I think blockchain is going to find that trust element is the barrier that they're going to take. Yes, I get where Digital Street is wanting to come from, to remove that bureaucracy, to try and change the weighting, but actually we still need to look at what those intermediaries and how they need to be. You know, blockchain and cryptocurrency, I don't see a wide adoption because we would need our lenders to get involved, and lenders aren't currently going to look at it until they see that less volatility, if they look at the transactions being more manageable, if it looks to meet their current regulations that they've got in there. So I think from a property point of view, it's something we need to be aware of. And we're starting to see blockchain come in certain areas. You know, Cobbold, for example, is a distributed ledger technology, uses blockchain in the way that it's actually doing the sharing of data around property sales. So it's already starting to make its entrance into our sector. I think wider for payments, for transactional, we're going to need to see how that plays out from our customer due diligence point of view before we start seeing that actually making huge changes into the way that we do it. And again, for rental payments, I don't think that's something that's imminently on our radar, but certainly keep an eye on, because when it starts coming to this for regulation, we want to make sure we're ahead of the curve, not suddenly feeling like these are being done to us. And if you start looking at their call for information and where they're getting it from, so there was a survey that was done in June 2021 that actually targeted probably that Gen Z, that, you know, the 18-year-olds, not my market, I don't play into that anymore, but they actually found that 45% of new investors at that Gen Z age had placed their money in cryptocurrencies. So it is certainly gaining momentum. So if this generation gap and young people getting this interest in it, they're going to be our next investors in property. Are they going to look at wanting to do that within their digital currencies? There's current barriers, you know, and this is where that regulation and how it changes for the widespread adoption. But HMRC, for example, where they're saying they're neutral, that's great. But actually, they've taken a view that if you pay for it using cryptocurrency, they'll actually take the value at the time of completion. So if I transfer that currency and there's a few days between the actual completion of that from the transfer and the cost of my cryptocurrency, the value goes up. HMRC are going to take the value of that cryptocurrency, not the asset that I'm purchasing, for stamp duty purposes at the time of completion. Now, obviously, things like that, we really need this instant blockchain cryptocurrency, because we can't have that delay. We can't have it being sat within a transactional environment where it could have these consequences. And as HMRC, they're taxed. They've done it to their either way. So if it goes down, then it goes at the property that I purchased. They're in a win-win situation, but I will expect nothing different when we're looking at this from how we actually interact with these government departments. But part of why we're getting in this discussion at the end of the month is to make sure that technology is used, because we can make sure this happens quickly, streamlined, without that need for human interaction. Keep human interaction where it's needed, but the transfer of cryptocurrency, the transfer of data, is not something that needs to be held under a human being. So why technology now? So at the center of the UK's review was a call for evidence on their AML CFT regulatory regime. And this is partly because of that, where we look at convergence and divergence as we start to separate from the EU, and as deciding not to implement the sixth directive, because our policies, what they were looking to achieve for the bloc, we already felt we were robust enough to actually meet those same requirements. But actually, it does give us a chance to look at this government document and say, where else are we seeing this divergence, and where else could technology play a part? And when we look at those, there's three areas. The first one that I kind of covered a little bit is this approach to risk. And it's probably the most crucial theme when we think about what the government are looking to achieve. So emanating from this, what they're actually looking at the document is, as I mentioned, this private sector identifying and controlling financial crime risk. Now, for us within the private sector and thinking of property purchase and what we can see now with assets, with what recently happened with the sanctions that have gone against Russia, it's a real challenge for that balance between meeting the regulatory requirements of what we're going to want with this call and change and genuinely identifying criminal risks. It's felt previously that it's not really been a risk-based approach. What it actually has felt like has a tick boxing exercise. And that's where technology can actually help, as actually feeling that this criminal risk as the entity itself, the exposure, the activity, the product offering on an RBA basis is actually something that technology can help us feel that we're making a difference, rather than, have I ticked the boxes to continue with this transaction? Am I actually assessing this individual for the financial crime risk? And as opposed to consultation, they remain committed to this risk-based approach. So let's look at the frustrations that we got. But I don't know about you, because we deal within this. that document was sent out, I haven't seen a call for the frustrations that we get within the property sector itself. So who are they actually asking for this? And what they're actually doing is they're going to the supervisors, which is HMRC as it currently stands. So if they're looking to do this and remove the need for human interaction, then that they actually need to look is a technology and sector solution, not a sector supervision solution. That should then allow them to see a picture of the risk and know what they then need to get involved with as the enforcers, so that we feel that the people who are adhering to this policy, who are doing those extra customer due diligences where we've been requested, are reporting anything via our money laundering reporting officer that HMRC is, that the people that aren't, we feel that they have punitive measures. Because at the moment it seems that we are doing it, and that by doing it, we open ourselves up to review, but those that don't do it, are they actually seeing that same? And when we look at things like that, that brings us on to supervision, and particularly looking at AML supervision. Because without supervision, it doesn't really have any teeth for any policies that they put in. So it's a significant element of the consultation document is actually looking at this sector supervision and radically thinking how this works for AML processes. So they're looking at the agenda in the EU, and the agenda for the EU is all about consistency across the bloc. Well, that's not the UK's view anymore. So they want to look at the loopholes that criminals can exploit. Consistency is something from the review document that they feel is a little bit lacking in the UK approach, particularly in the private sector, not just the private property sector, but the private sector as a whole. And they feel that supervision doesn't take place. So if we're going to keep our current AML supervision structure, do we actually have any lessons that we can learn from how it's being put within the industry? And they're asking various sectors, including the property sector, to now start putting in how these jurisdictions, how a new layered approach could actually work for us, and what would be the problems. They're also looking at various options. Maybe they extend OPBAS. So this is the Office for Professional, and it looks at the money laundering situation. They've already got a mandate, and they already look at UK supervision, but not within our sector, which falls under HMRC. So, because they're responsible for trust, company service providers, the real estate sector, and the art market. That falls under HMRC. But should we? If we already have a mandate and we have a supervisor who is actively processing this sector supervision and making sure there's punitive measures, should not the real estate sector, the private property sector, actually go under that same mandate? And if we're looking at technology and data really being the solution, then after this years of awkward coexistence that we've actually got to fight financial crime, to deal with payments, for our industry to be seen as the professional body that it is, then we need to make sure that technology and data is widely accepted as the best route to take this. And the call for evidence, to be fair, does make it clear that in the government's plan to remove these barriers, part of those barriers are the adoption of new technologies. That where we are able to deal with things such as digital IDs, deal with things like lifetime deposits, where we look at the removal of certain legislation, what they actually want is technological adoptions and innovations, and that there is a level of support. So the lawmakers, the people who are actually dealing with these policy changes, have now signaled a strong commitment for looking for innovation from technology to help with this compliance and how it's implemented moving forward. So that is why we are actually going to be there at the end of the month, is to make sure that voice is heard, that when it comes to payments, when it comes to that actual flow of money that we're starting to see more AML playing into, that the voice of the industry is being heard. So I did actually say to you that what I'm looking for here is also to put a call out to the industry, and we are going to do that. So what we're actually going to do is post this for everybody in attendance, for every user of PayProp, for every group that we work with. We're going to put out a small survey. It is only a handful of questions, but it's the key things that the government is going to ask, not just in their seminar, but in their workshops that they've got throughout happening that day, and that will then be taken back to their officers. And what we want to do is make sure that your voice is heard. So please, as many people fill that in as possible. I'm going to go, I can see we've got a question here that was actually kind of asked. And it says, if all banks force agents to have individual client accounts rather than pooled insured accounts, surely everyone will just transfer everyone into custodial. Well, it's not just the client money there that was asked by Trevor. What we're actually talking about is the flow of all money. And what we've got to come back to, and this is why technology, what we've got to come back to is the original reason why this was brought in. So this was originally brought in to fight crime based on what was available at the time the legislation was put in. And it was the idea that the easiest way to beat the criminal is if we can see the entire transaction flow. And unfortunately, pooled client accounts disrupt that transaction flow. And as we've talked about, part of the thing about using blockchain is you get to see end-to-end transaction flow. It is a trusted, secure data flow. So actually the reason for that, and the reason for not wanting the pooled client accounts, there are already technological solutions that remove the need for them to do that. So you're right with custodial, but there is also an argument, and it has already been mooted around, that the move to lifetime deposits will be actually a way of replacing the insured. Yeah, if we go back to the custodial, that was always the route of the government. For the financial crime aspect, the idea is they wanted our whole industry to be on a custodial basis. It was only because at consultation, it was unworkable because of what it would have done to the industry at the time of that transfer. But we're now years on, and they're hoping that they can make that transition. Will it mean what it will look at, how it will happen? I think nobody knows. I mean, lifetime deposits, they sound great, but the practical application still needs to be worked out. We still need to see what that looks like. What I'm actually saying is they're constantly looking at these, they're constantly looking at ways. What we need to do is make sure that we're in that conversation. If we're not in that conversation and we just talk around our rooms, around our closed clubs within our sector, when these are done to us, we cannot suddenly then have a voice as to say what is happening and why. So if we know this is the route, and unfortunately as criminals start to exploit, they will look at ways of tightening up. What we need to do is work as an industry to make sure it's clear what we're experiencing. And as technology providers like ourselves, we need to make sure that we're listening to that and that we're actually developing a technological and data solution that allows the government to meet its requirement to fight financial crime, but at the same time allow an agent to do their job, which is unfortunately not to fight financial crime, to be a transactional processing. As we said, it's to be the person in that transaction. And that is why technology is being invited along to do this, to make sure that actually our voice is being heard. Now, if any of you, my details are up on the screen, and for anybody who is attended or registered, I will send this out. If there are any questions that people have got, a way to contribute, aside from just the survey, then please reach out to me, ask me any questions. If you're experiencing that you are losing your pooled account, and not just for PayProp, but just for the way the industry is adopting and finding solutions for this, please feel free to reach out to me. We are going to deal with this together. It is not something that we can deal with as separate. As a technology provider, we need to listen to the industry. Yes, we're going in to be in this discussion with the government, but what we want to do is make sure that we're a voice of how we see people, not only using the industry now, but what would actually benefit us in the future. So thank you very much for attending this webinar. You can watch it at the end, watch it in your leisure, reach out. If any of you haven't yet seen PayProp, then please put a call, see a demonstration, and to see how we're helping you do this with financial crime. But I look forward to doing a webinar. We'll be doing one after this government event, where I'll be feeding back to you how your voice, how that information that we got from that survey was actually received by the people that are actually going to make these policy changes. So I look forward to seeing you all in round 2. Thank you very much.